Good morning. Here is today's Korean economic news briefing. Today, we begin with a significant development in economic policy as the government held its first macro-financial interministerial meeting. Deputy Prime Minister and Minister of Economy and Finance, Koo Yoon-chul, chaired the meeting, joined by Planning and Budget Minister Park Hong-jun and Financial Services Commission Chairman Lee Won-jun. The core message from this high-level gathering was a strong warning against excessive won depreciation, with DPM Koo stating that excessive won weakness, detached from fundamentals, does not help our economy. He emphasized the need for preemptive policy measures to prepare for a potential long-term conflict in the Middle East, even considering worst-case scenarios. This signals a proactive and coordinated effort by the government to stabilize the currency and fortify the economy against external shocks. The ministers affirmed their commitment to operate as a one team, convening regularly to forge optimal combinations of fiscal, financial, and taxation policies. This coordinated effort directly addresses a pressing issue for our economy: the recent volatility and weakness of the Korean won. DPM Koo specifically highlighted that the inclusion of Korean bonds in global indices like the World Government Bond Index, or WGBI, and other major bond benchmarks could play a crucial role in stabilizing the exchange rate. Indeed, today, April 1st, marks a pivotal moment as Korean sovereign bonds officially join the WGBI. In anticipation of this, the government has already activated a dedicated task force for constant monitoring and investment attraction. This task force, involving the Financial Services Commission, the Bank of Korea, and other relevant agencies, will diligently track the inflow of foreign capital, address investment hurdles, and enhance the competitiveness of our national bond market through robust investor relations efforts. The WGBI inclusion is widely expected to act as an oasis for the high exchange rate, with estimates suggesting a potential influx of up to 80 trillion won in foreign funds into the Korean bond market. This substantial inflow would directly boost demand for the won, thereby exerting upward pressure on its value and helping to stabilize the currency. The immediate impact was palpable in today's market, with the $1 exchange rate falling and the Kospi index rising, partly fueled by the WGBI anticipation and hopes for an early resolution to the Middle East conflict. However, it's important to note that while the WGBI inclusion is a positive development, some analysts project that the effect might be partially offset by an estimated 11 trillion won in annual dividend outflows from foreign investors. The inflow is also expected to primarily target long-term bonds, with limited impact on ultra-long-term instruments. Nevertheless, the initial reaction in the bond market was clear. Yields on Korean Treasury bonds uniformly declined today, reflecting the increased demand and perceived stability. Shifting our focus to the global economic landscape, U.S. Federal Reserve Chair Jerome Powell reiterated his cautious stance on monetary policy, stating that the current policy framework is in a good position to observe the impact of the ongoing conflict in Iran. This reconfirms the Fed's decision from the March 18 Federal Open Market Committee meeting to hold interest rates steady, signaling a wait-and-see approach amidst global uncertainties. For Korea, the Middle East conflict continues to be a major external variable. In response to potential Middle East shocks, the government is considering a supplementary budget of 26.2 trillion won. This significant fiscal injection aims to defend the economy from adverse impacts, though it also sparks a debate about the potential for increased inflationary pressures versus effective economic stabilization. Compounding these concerns, the petrochemical industry is facing naphtha supply instability due to the conflict. The Ministry of Industry, Trade and Energy, in close coordination with the industry, is now mobilizing all available resources to secure stable supply, including import cost support, export restrictions, and strategic use of oil reserves. Despite these global headwinds, Korea's export sector showed remarkable resilience in March. Our exports surged to an unprecedented $86.13 billion, marking the first time in history that monthly exports have surpassed the $80 billion mark. This represents a staggering 48.3% increase year-on-year, far exceeding the previous record set in December last year. This strong performance underscores the robust fundamentals of our export-driven economy. However, concerns are growing over the increasing concentration of exports, with semiconductors alone accounting for roughly 38% of the total. While the semiconductor sector continues to demonstrate strong leadership, such a high reliance on a single industry could increase the overall volatility of our export performance. In the critical K battery sector, the first quarter of this year looks challenging. All three major Korean battery manufacturers are expected to post losses, primarily due to the ongoing EV chasm, or a slowdown in electric vehicle demand, particularly in North America. These companies are now actively seeking breakthroughs by expanding their energy storage system, businesses, anticipating a market rebound in the latter half of the year. Interestingly, amid a broader foreign sell-off in the Korean stock market in March, where overseas investors offloaded 35 trillion won worth of shares, nuclear power-related stocks saw net buying. This suggests a growing recognition of energy assets, particularly nuclear power, as strategic investments. This is further supported by discussions in the U.S. on the U.S. Investment Act, where U.S. lawmakers expressed keen interest in welcoming Korean nuclear power projects. Simultaneously, our strategic partnership with Indonesia is also being elevated. As Southeast Asia's largest economy with a GDP of $1.4 trillion and a population of 283 million, Indonesia is a crucial partner, rich in critical minerals like nickel, making it strategically important for our electric vehicle, battery, steel, and petrochemical industries. In the financial markets, beyond the WGBI effect, the Kospi index itself is increasingly being referred to as a semiconductor ETF. The disproportionate influence of Samsung Electronics and SK Hynix, which together account for nearly half of the index's weight, is heightening overall market volatility. Today, both the Kospi and KOSDAQ saw sharp gains, with Kospi surging 8% and KOSDAQ 6%, driven by optimism about the Middle East situation and the WGBI inclusion. Meanwhile, BNK Asset Management has launched the BNK KOSDAQ Venture Fund, aiming to generate stable alpha returns through event-driven strategies, including utilizing SPACs, rights issues, and block deals, rather than simply capitalizing on policy benefits. Turning to the real estate market, the government is intensifying its efforts to curb household debt and stabilize the property sector. New measures include capping the increase in household loans at 1.5% this year and targeting a reduction in the GDP to household debt ratio to 80% by 2030. Furthermore, stringent regulations will be applied to multi-homeowners in Seoul and other regulated areas, with mortgage maturity extensions now generally prohibited. These high-intensity measures are in line with President Lee Jae-myung's policy to stabilize the real estate market by fundamentally blocking the inflow of funds for property speculation. Consequently, Seoul's apartment auction market has shown signs of cooling, with the successful bid rate falling below 100% last month for the first time in 6 months, indicating weakened buyer sentiment, particularly for ultra-high-end properties. On the political front, the ruling People Power Party has unveiled a half-price Jaeon's public housing initiative as its first real estate pledge, aiming to provide rental housing at 50% of the market rate in Seoul. Finally, in the realm of technology and international trade, artificial intelligence remains a key driver of innovation and competition. NVIDIA has made a significant $2 billion investment in Marvell Technology, a fabless semiconductor firm specializing in connectivity, to strengthen its AI infrastructure ecosystem, particularly in AI data center connectivity. Domestically, companies like Hanwha Mobility are accelerating their digital transformation efforts through AI adoption and employee training. Nexon has also unveiled a long-term growth blueprint, focusing on global expansion and AI strategies for 2026. However, our reliance on AI also faces international scrutiny. The U.S. Trade Representative, USTR, recently highlighted Korea's trade barriers in its annual report, specifically citing concerns over the exclusion of U.S. companies from AI procurement, cloud, and GPU bids. The USTR report also raised issues regarding Korea's digital platform regulations and network usage fees, intensifying trade pressure. On a broader scale, China's science and technology budget has surpassed 90 trillion won, with 25 trillion won dedicated to basic research, underscoring its relentless pursuit of technological leadership and innovation. In summary, today's economic landscape is characterized by the government's strong commitment to currency stability and economic resilience against external shocks, particularly from the Middle East. The WGBI inclusion offers a glimmer of hope for the won, while our export sector demonstrates strength despite growing concentration concerns. However, key industries like K-batteries face headwinds, and the real estate market is undergoing significant policy-driven adjustments. The AI revolution continues globally and domestically, but also brings challenges in international trade relations. For investors, these developments suggest a need for vigilance regarding currency movements and geopolitical risks. The WGBI inclusion could support bond markets and large-cap stocks, but sectoral imbalances, particularly in exports, warrant careful consideration. Opportunities may emerge in AI-related industries and strategic energy assets. For the general public, The government's focus on stabilizing the exchange rate and household debt aims to mitigate inflationary pressures and provide greater certainty in the housing market, directly impacting daily living costs and financial planning. That concludes our Korean economic news briefing for today. Thank you for joining us.